John, how can we help you?
Oh, thanks for taking my call. My question is mainly about mining shares. Now it looks as if we're going to have an MRRT or something like it. Does it look as if, because the mining companies are going to be paying more tax, franking rates will increase for miners as far as the dividend is concerned?
Well, the level of franking is not dependent on the tax that. It's not dependent on this particular tax.
It's on income tax, isn't it?
It's largely dependent on where the money's earned and whether or not they report a profit on their tax returns. You've got to remember that the profit that's reported in the annual report may not be exactly the same as the profit. Sometimes it's a long way off the profit that's reported in the tax return. And personally, as an owner of a business, as a shareholder, I'd love to see those tax returns. We don't get to see them. So one of the interesting things about this particular tax is it's going to actually change the intrinsic values of all the companies. Their relative differences will actually in many cases remain constant, but what will change is the intrinsic values of these businesses will actually will drop. It'll be a step change, and I think it's important to understand that globally tax rates are different for companies, and they still manage to operate. Some of them still manage to make profits, and we've got to assess those profits as they're reported.
Clint from Sydney, welcome.
Hi, thanks for taking my call. I had this question about Woolies. I know it's a wonderful business and, you know, would rank among the top 10 businesses in Australia. And I've been having the shares for a long time now. I'm just a bit curious to know about the panel's opinion on the latest, late strategy that the company is having going into a totally different area. And is it possible that this move would dilute the brand, given that it's competing against a bigger animal like Bunnings?
Good point. How it is.
When you think about Bunnings, you need to remember that Bunnings has been successful in the absence of a serious competitor. So when people concern themselves that Woolies is coming in, got this really serious Goliath as a competitor, remember they've only become the Goliath because there was no other competitor to seriously chip away at the moat that they'd built. Now there is. They've got patient capital, they've got a lot of capital, they've got plenty of time. My bet, you know, if you put a gun to my head and ask me to bet one way or another, I'm going to bet that Woolies are going to succeed with this, and it's going to be another step change in the performance of this company for another 5 or 10 years. Just in relation to the value versus the price, if you'd bought the shares back in December 2007, you'd still be underwater in terms of the return on this company. But that is because back in 2007, the intrinsic value of this business was about $20.50. The price has since gone sideways. The intrinsic value is caught up. It's now $26.60 or $26.70, and I've got it rising to about $30 next year, and beyond that, $33. So I think this business isn't a bargain, but it's rare to actually be able to buy this type of business that has such brand awareness. It's so well known as an investment candidate in the stock market as well. It's almost impossible to be able to buy it at a discount. This is almost as close as it's been for a very long time.
So you'd be slurping it up around the $24,
well,
$26 mark?
I have slurped it up. I own Woolworths, so I should have perhaps said to the viewer.
I was on the program. I was on this very program back in August, saying that, you know, this is one of the rare opportunities to actually buy it at a discount to intrinsic value. It was only a slight discount.
Yeah, we got it in Profit Hunter Group. It was just there for that quick morning.
It wasn't there for very long, was it?
Yeah.
No, and it was happening in an environment where all the press was telling you to switch out of Woolies and to go for Wesfarmers.
Well, isn't that in itself a good buying signal?
Gentlemen,
when all the media is telling you shouldn't buy something,
exactly.
It's usually a good time to buy it.
Mark, how can we help you?
Good evening, guys. Yeah, just got a question on resource generation, RES. I've just been following them for a little while, and I noticed they had signed some good contracts with India, with their coal mine out of South Africa, and just I think it's looking like a promising little episode. So I'm thinking, hopefully your panel agree.
It's interesting.
Roger.
There's actually some forecasts for this company. It hasn't yet made a profit. But let me give you some numbers. It lost $8 million in 2009. It lost $3.3 million in 2010. It's forecast to lose $584 million in 2011 and $582 million in 2012. So they're going to have to raise some more money. Difficult to value a business like that that continues to lose money.
Yeah. Okay. Well, that's all we have time for you tonight. We have...
It went by so quickly.
It did.
Okay.
It was a good program.
That's all we have time for tonight. Thank you to our guests, Roger Montgomery from rogermontgomery.com.